Good afternoon, team. All right, here we are. It's been a little while. Man, there's so much going on. I will tell you this, been very busy. Buyers are back at it. You know, the activity in the San Diego real estate market has picked up again. We kind of knew this would happen. It happens almost every year. You know, that transitional period from summer to getting school going again, back into a new routine. Then the home buying picks back up. So right on schedule with expectations for the seasonality in the San Diego real estate market. So very good things happening. Very good things happening. Been very busy. Lots of opportunities to refinance. If you haven't refied, if you want to look into it, call, text, email me if you want to buy or refi. So here's basically what's going on. And I'm going to talk about China today. We're going to talk about Bitcoin. I'm not going to go crazy deep into China just yet because there's a lot. It's basically speculative at the moment. And it's tough. It's tough to say what the impact of all this stuff is going to be. I'm going to show you a graphic though that'll give you an idea of the carpet pull that's going on. So we know bad things are coming for China, and I don't think anyone's too surprised by that. We've known that they've been building ghost cities for decades. I mean, a long time. Maybe not decades. Maybe 15 years. A long time they've been building ghost cities. What is a ghost city? Well, look it up. Just YouTube China ghost city. And you'll see people go there to these ghost cities where they've built entire infrastructures for tens of thousands of people and no one is there. Apartment buildings, retail, business, commercial stuff, high rises, everything. And there's literally no one there. So they were just sort of fake growthing a bunch of stuff. And that rooster has come in. Like it's coming. So let's first take a look. We're going to first take a look at that. I got so much stuff to show you today. I'm going to go through it pretty quickly, though, as I do have a lot to do. Fed taper, we're going to talk about that. Looks like November is when it's going to start. We're just going to explain a few things when we get to the bond market, which we will here in not too long. Let's see. Okay, so here's the graphic I want to show you. These are Chinese property sector bonds. And you can see where this began here back in the end of May, the very beginning of June. Right here. This is the spot, the end of May, where smart money knew what was coming. You can see the rate, and it just sort of trails off. Then you can see regular market figures it out here in July. And I mean, this is one of the biggest carpet pulls I've ever seen from a bond perspective. I mean, I maybe the 2008 crash. A lot of people are saying, hey, this is going to be like the 2008 crash. That's possible. That is possible for China. Now, the good news is, I think the effects of this, from an American standpoint or just a United States standpoint, would be pretty limited. There are definitely some hedge funds that are invested in these Chinese assets. There are definitely some hedge funds that are invested in Chinese real estate. There's no question about that. I still don't think Chinese real estate is necessarily a bad investment, but I do believe that there is some serious downside, and who knows what kind of domino effect is going to take place in China. So with that said, do we have anything to be worried about here? Well, we don't have anything like this going on. We're not building ghost cities here. We can't even build real cities here. We have people who want to buy homes and we can't build them. We have the opposite problem China has. China has all these people. They don't have anyone who wants to move into their ghost cities. It would be amazing if we had a ghost city here. We could sell it in 2 seconds. So don't try to compare us to China. Don't fall for a lot of the fear mongering that's going to take place with this, especially on YouTube. I mean, tons of fear mongering on this. Oh man, I've seen the guys. Oh boy, here it comes. They're so excited. Oh my gosh, it's going to calm down. Everyone relax. What's happening in China may not be very good, but the Chinese people are very smart. They will figure something out. I believe. I don't think they're caught off guard by this. I think they have a plan. I think they'll figure it out. It may not be pretty. It may not be quick. But I give them the benefit of the doubt. Let them figure it out, okay? That said, the one thing that can be a spillover is fear. And that's the one thing we have to watch. Fear can ripple through, and people could get scared if they heard horror stories happening in China. Mind you, if horror stories do happen in China, will it be bad for the U.S.? No. We already have seen flights of massive cash from China to the United States. That very well, it sort of slowed down in the last year and a half. That very well may pick up. And there are multiple functions in which that could happen. Bitcoin very well may be one of them, in fact. But I'm not going to go there right now. What I am going to say, though, is if there is a property collapse that happens in China, there are a lot of people in China with equity. There's a ton of equity in China, a massive amount of equity in China. People may exit. They may try to get out. They may try to move assets to the United States or other safe havens, if you will. Totally could be good for us. Totally could be good. Of course, what will happen is Chinese government will ban money leaving China or whatever. They do whatever they want. But it could be good for us. I don't think it'll be bad. So that's where we're gonna come back to China in a second when it makes a little bit more sense. Hold on a second. Hold that thought. We're gonna jump away from China for a second. Fed says gradual tapering process mid-November. Okay, gradual. Important word, gradual. There's other things going on with the Fed. A lot of things going on with the Fed. A lot of things that we found out recently, like Jay Powell here, the guy you see there. He owns securities. He actually owns a tremendous amount in the BlackRock fund. That's right. BlackRock, a bunch of these Fed chairs own a bunch of stocks and all kinds of stuff. Insider trading, crazy. I agree. Look at what Leslie said here. That's wisdom. It's true. Fear seems to be the MO of late. Yeah. Well, expect more is what I'm going to say on this particular front when it comes to China. And I wouldn't buy it. I think that the big firms like the BlackRocks are going to run stories on places like CNBC saying that, oh, the sky is falling in China. It's coming here next, to try to get prices lower for their real estate scheme that they're pulling off here nationwide in the United States. And I don't think that's going to stop for decades to come. I do think they are scheming to own all of the real estate. And it's going to take them a long time to accumulate it, but I believe that is what is going on. So get yours while you can. So gradual taper from the Fed. Okay. We're going to come back to that. So we got Fed. We're going to talk about interest rates. We're going to look at mortgage bonds in a second. We just looked at the Chinese bonds connected to real estate. One of the biggest carpet pulls I've ever seen. Look at the red one here. Boom. Just murder. This is so ugly. As bad as it gets. Now let's talk about the rise of Bitcoin. We'll come back to China. We'll come back to bonds in a second. I'm going to bring you full circle. So this is from Fidelity. Fidelity Investments. Remember when I said, hey, the reason to get into Bitcoin, this has been, I don't know, April, May, is because you're going to see the sales organ of Wall Street will start pushing it. Right now, they're telling people not to buy Bitcoin. When they flip, and instead of suppressing it, they push it, things are going to get nuts. Fidelity Investment says that Bitcoin could hit 100,000 in the next couple of years. It won't take a couple of years, most likely. I'm betting on that. It could be by the end of this year, but they're saying that that's going to happen. Why do you think they're saying that? Because they know they're headed that direction. And this particularly is for the fact that I can almost guarantee you next week, we are going to see an ETF approved, a Bitcoin ETF finally approved by the SEC. First one is due October 18th. That's Monday. So the first potential date to rule on, one that we believe iShares, which is going to happen next week, would be on Monday. That is a product that Fidelity Investments, the other brokerages, can sell and make money on. So they're about to get a product to sell, okay? And they want to put out a piece that makes it look appealing. Now, you would think with all the rules and regulations in the financial advising world, you wouldn't be able to say something like this. Oh, yeah, I think it's going to double from here. But they are. And I guarantee part of that is they're priming the pump. They're going to sell this thing. They are going to push it. It is coming. Now, Ethereum, for people like Mark Cuban, he says that Ethereum has the most upside. Well, here's the thing with Ethereum. I own a lot of Ethereum too, because I agree there's a lot of upside there. Maybe it is the most upside. Here's the trouble, though, and the thing that most people struggle with. Look at cryptocurrencies here. Total market caps. Of course, Bitcoin has the biggest market cap now, over $1 trillion. $1.083 billion right now. Price at 57.5 approximately right now. And we got about 18.8 million BTC in circulation. The total is 21 million. We know that. The total max supply, 21 million. How about Ethereum? Well, Ethereum's 118 million right now. So almost, how much is that? 6 times as many. And how many will there be? Is there a cap? I know they're trying to limit the supply. They know that that's a problem with Ethereum. They're trying to limit the supply. There's just so much more of it. And and you can mine more of it as well. It's easier to mine. They don't have the halvings that you have with Bitcoin and the limited supply that you have with Bitcoin. So just know that when you look at them, you may say, oh, well, this one's 57,000, this one's 3,500. They're both mainstream. They both make sense. Ethereum, go all in. If you want to own cryptocurrency, I think you should own both of these. If you only want to own one, own Bitcoin. Don't just own Ethereum. Remember, Ethereum has like a creator / CEO type person who could, they can change the rules. They can change how much Ethereum. They can change the way it operates. They can change the use of it. They can change the inventory, the supply. That can all be changed. Those rules are not in stone. With Bitcoin, those rules are in stone. They can never be changed ever by anyone. There is no CEO. There is no person to lobby. It's all in stone already. So that's why Bitcoin is superior. That's why you see the premium on Bitcoin. That's why you see it continuing to climb. And that's why one of the reasons why Fidelity believes it's going to hit 100K in the next couple of years. I think it'll be quicker than that. Okay, now let's go back to bonds for a second. So that China's going to fall. Bitcoin's going to rise. You don't have to take my word for it. It's out there. The information's out there. I'm not the only one who believes it. I've bet my money, though, on this. Now let's take a look at mortgage rates. This has been so brutal. It's so hard for me to do a video when I'm just watching a massacre take place. So difficult. So today, we have a little upside. We have a little green candle. I like it. We're up 23 basis points. The overall trend is still lower. Doesn't look good. It really doesn't. It doesn't look good. This is a decent candle. We got a little wick here. Okay, so that's not bad. I like it. But look, we're also right at a resistance point here. A resistance point that is, again, a continuation. Look, former support turns into resistance over here. So traditional continuation, come up off the support, hit the trend line going lower, fall below previous support, come back up to previous support, which is now resistance, and continue the trend lower. This could go sideways for a while till it hits the trend and then go lower. But it just looks like rates are going higher. And the Fed is talking about tapering November. Where's November on this? So here this is one of the things that sucks right now. We've got to pull back quite a ways before we can even get to when was the last time bonds were in this bad a shape? How far back do we have to go? I have to go back to April. So we're on support right now that is from April. It's not ideal. It's not an ideal situation whatsoever. It looks bad. It looks really bad. And not only, by the way, is this resistance we're facing right now from this support level right here, this little miniature support, dead cat bounce, but also back here, support. So that line right there, that R1 is very, very thick. It's going to be tough to get through. I think today's the day. So my advice is lock your loans today. I know there was no lock alert issued by Barry today. Maybe he'll issue one tomorrow, depending upon where we are. But I'm telling you right now, lock your loans today. Lock your purchases, lock your refis, lock them up. Lock it up. You lock it up. So lock it up. Little wedding crashers joke. Lock it up. All right. So our bond market doesn't look as bad as China's right now. But what's one thing that we do know about China? They do own quite a bit in United States bonds. Now, most of the bonds they own are treasuries. I imagine they do own some mortgage bonds too, but the bond market is massive. And so I believe the last time I checked on this, China owned about 1.1 trillion in U.S. bonds. And I don't know what the mix of that was. I honestly don't even know if that was accurate, but that was what I believe was accurate from a reliable source. So if they own $1 trillion in bonds, is that enough to move the market? Yes. Yes, it is. And this is the real concern. If we're concerned about China, spilling over into America, I like what you're saying there, Robert. I get you. We could talk about that. Yeah, the use case. We could talk about the use cases. I disagree. I think Bitcoin has the best use case, but we'll agree to disagree for now. We'll have that debate some other time. If China gets monetarily, economically desperate, and they would have to be desperate to do this, that marker to sell those bonds that are those U.S. bonds that they own is when they only want to have to pull if they absolutely have to. They'd rather use that as a sword as opposed to a shield, if that makes sense. They'd rather use the fact they own our bonds to hold us to something than to have to use it to bail themselves out. So I think it would be a last resort. If we see them sell the bonds, here's two things we need to know. Number one, that means that things are really, really bad over there. Much worse than what anyone is going to be reporting. Really bad. Number two, if it does happen, they have enough bonds to move the market. They do. But what if they did? What if they dumped $1 trillion in 10-year treasuries tomorrow? What would happen? Rates would spike up. They would. They'd spike up quickly. We've seen this happen before, though. Not for that same reason, but we've seen it happen before. We've seen mortgage rates go up 1% overnight. And then within a week or two, they're back to where they're supposed to be. I think that's what would happen this time. There is a thirst for income out there. The stock market has been pretty flat, down even a little bit here recently. It would be a good time for us to get some bonds on sale. It really would. They would pile up. They would pile in. Also, the fact that, we have the Fed potentially as a seller here. The Fed can step back, though. If they see the market getting murdered, they can step back and go, you know what, we're not going to sell into this. They don't have to execute. That's one thing about the Fed that's nice. So if China does want to sell their U.S. bonds and it does spike rates for a short period of time, I do think it'd be temporary. I do think that there's an appetite out there for those bonds. If the 10-year got to like 2% or something like that, I think it'd just get eaten up. I mean, hand over fist buying from all sorts of risk-off funds and people who want to exit the stock market, because the stock market, let's just look here. We didn't do this today. We're going to do it right now. The Dow's pretty flat, 34,377. Okay. Look at oil, $80. Told you. Gold going nowhere. We are in massive inflation right now and gold isn't moving. I'm telling you, if you own gold, get rid of it at 1,800. Sell it right now. Sell it. If it's not going to go up in this situation, when is it going to go up? Does the stock market have to go down for gold to go up? Is that what the hedge is now? I thought it was an inflation hedge. What is it hedging? Is it hedging anything anymore? I don't know. And there you see Bitcoin rising higher, and can expect that to continue. Buy the dips, team. So here's what we're going to do. We're going to look at bonds. 10 years at 1.5. If it gets to 2.25, I think you will see, massive demand. You will see money pile in there, and it may take a week or two, maybe even a month or two to recover, but I think it will recover. I don't think they have enough firepower to really ding us financially for a long period of time. That's what I was trying to say. Although it may be able to scare us, maybe able to scare some people, don't buy into that. Steady hands, diamond hands, diamond hands. Be careful. Of course, if you want to risk off right now, not a bad idea. You know where my money is, but just know. And in fact, someone reached out to me today and said, "Hey, I heard rates dropped." Listen, every single time that we have one good candle, like we have today, 23 basis points, the internet marketers who are marketing mortgage rates are like, "Oh yeah, rates dropped today, blah, blah, blah." They're just trying to get you to call. They're just trying to get you to fill out forms online. Don't do it. Just don't do it. Don't do it. Don't fall for that. They're going to sell your information, try to fill you full of bullshit. Just avoid it. Just don't do it. It is not worth it. There's nothing there for you. Okay. If you're watching this, you already have a loan advisor who will shoot you straight. That's me. Listen, you don't need to deal with any of that crap. You just don't have to. Don't have to sign your name on a list that's going to get you cold called forever. Okay. So main points today: China falling, Bitcoin rising. Expect more of the same. I did want to really quickly. So I like where Robert's at here. ETH has a better use case. I don't agree, and here's why. And I'll tell you this, Robert, and we'll just have a quick crypto debate here. The reason I disagree is because from the standpoint of everything that Ethereum can do, I think Cardano can do better and cheaper and faster. But I do think Ethereum is well branded and well marketed, and that matters. Bitcoin is known worldwide. People know it. They don't know what it is, but they know. They've heard the name Bitcoin. They've heard the name Ethereum. That matters. So it's going to create more opportunities for Ethereum than Cardano, for example, which I have a boatload of Cardano, full disclosure. Bitcoin, however, is operating as currency on a massive, massive level now, and even as legal tender in a country, El Salvador. It has the most robust features and can handle almost anything. There's never been a breakdown of the Bitcoin network, ever. and there never will be because of the way that it is constructed. So for me, it's all Bitcoin. But I own Ethereum because I agree with you. It's a good investment. So it is a good investment. All right, guys, that's it for me today. If you have questions, if you want to chat, want to buy, want to refi, give me a call, text, shoot me an email. Happy to help. We're going to keep our eyes very closely on the situation that's happening in China, what's going on with the bond markets. I will let you know what's going on. I'll let you know what to do. For right now, don't panic. Don't buy into any fear mongering. Just know they use the fear mongering to try to get you to do certain things that they want you to do so that they can profit. Just remember that. So don't buy into the fear mongering. Stay steady. Buy Bitcoin. Buy real estate. Real estate is winning. Nothing's going to stop that in America. We're so low on inventory nationwide. And I don't see any way for it to be fixed. I don't see any way. So get your piece of it while you can before BlackRock buys it from you. Have a great day.